There we go. We are live and we are going to talk a little bit stock market, a little bit trading stocks, using options, buying, yes, buying spreads, buying credits, actually buying debit spreads. We're going to trade vertical spreads, high probability vertical spreads, not out the money spreads, not out the money calls, not out the money put spreads. We are going to buy spreads, right? Where we pay money and high probability we wait and we get a return. So I'm going to show you some of the things that I do that, you could get high probability returns. They're not exciting, but it's a good chance that you're going to make money. So let me bring up, there's my chart. This is the SPY, the ETF. So, and this is weird doing this live. So, something's wrong with the audio. You have to let me know. You have to let me know so I could try to fix it. So if you come in late, you can go ahead and hit rewind because this video will be up for good, up forever. And let's talk about it. All right, so the reason why you want to trade credit spreads. I keep saying credit spreads because I trade a lot of credit spreads. But we're talking debit spreads. But the reason why you want to trade debit spreads to make a lot of money. Some people trade debit spreads using options. I'm going to try to, I never really taught this, or actually not like I'm teaching. I never went over this to somebody that doesn't know. So I got to pretend that you don't know, and I got to try to keep it real simple and basic. So these are the option chains for the SPY, right? We're going to trade options, and here's all the chains. The chain is just, like these are the dates the options expire. July 22nd. Here, let me get my face off the screen so you can see this better. July 22nd, July 24th, July 26th. And these dates in the parentheses is the day that they expire, right? So these are the days how long the option is going to be in effect. 10 days, 12 days, 15, 17. So I like to hang around the 30-day mark. I like to hang around the 30-day to 40, 45-day mark because there's such thing as option theta. Now, when we trade high probability debit spreads, we're going to have positive theta on them, right? So we're actually going to be making money every day, even if the stock doesn't move, right? If it just stays the same, we're going to be making a little money. So let's do it by trading the SPX. Well, this is the SPY. See, I trade the XPX all the time, but we're going to trade the XPX today. And this is the chart. Now, it's not saying trade the XPX. I'm not saying that, hey, man, this is just for demonstration and for entertainment purposes only. Nothing serious here. We're just going to watch, and we're just going to put on a similar trade where we can kind of say, I think this is going to happen, but it's going to be a high probability of it happening and me being correct. And if you see me doing this, because it's hot as hell up in here, because I turned up off the AC so I get good quality sound. Yes, I try that hard to get you good sound. All right, so let's go ahead and make a trade. All right, so this is the SPY. Right now it's trading at 297.17. Let me go ahead and get that off so you can see that on the chart, 297.17. So let's go ahead and make a high probability spread. So we're going to go ahead and look at the option chain, and we're going to pick, let me see, something that's 30 days out. I'm going to do this one right here because it's not a weekly. It's actually a regular expiration, which I think is the third Friday every month. So we're going to go ahead and do this 26-day option. 16 August 19 is when it expires. So let's go ahead and open it up. We know the SPY is trading at 297. So if we look at our option chain, we look at these deltas right here, right? The delta basically tells us a couple of things, all right? It tells us how much this option will gain in value depending on the stock price. So let's say if this 52 right here, where it turns purple, the first purple, right? This 296, the 0.52. That means for every dollar that the SPY moves, this option will move 52 cents. Basically you get, like, if it moves one, you get half, So it's not quite one for one. So anyway, what this also tells you is the probability of that option expiring in the money. That means in this purple area, that means chances of success. So like this option right here, the 289, right? We have a 71% chance of it expiring in the money. That's good, because that means there's only a 30% chance of it not, right? We want to be able to buy options where the chances are of success or great. So a lot of people, when they trade options, they want some fast buck, and they'll come out here to these options that's in black and, select this, say 305. Oh, it's only 69 cents. Let me buy a whole bunch of those, and if those go up, you're going to make a lot of money, but there's a better chance that you can lose your money. See, look at the delta here. It's only 16. That means there's a 16% chance of you being right that it's going to be in the money. Now, granted, if the stock starts going up, you can make money. But if it doesn't reach that price, that option will go to zero. Okay? It will go to zero and you will lose all your money. So a high probability trade is to trade those that are in the money. By the way, this is live, and if you have a question, just go ahead and put it in the comments down below right there, and you'll see it pop up on the screen, and I'll address it. But for replay value, we just got to kind of keep pushing on. So let's go ahead and trade this 280. Let's trade this 285 option, right? We're going to do spread. So we're going to say here, buy a vertical, because that's what they're called, right? Because we're going to buy one option and sell another option just above it or below it. I always like to say below it because it's down here. For protection, right? And so we're going to go 5 strikes. All right, so that's the 285. We're going to go ahead and go here. We're going to buy the 285, and we're going to sell the 290. Now, this is a in-the-money credit spread. See, both those option that we are buying and both the option that we are selling is in the money. So it's going to cost us $4.32. See, now, an option is priced. See, it's $5 wide, right? It being $5 wide is gonna cost us $5. Let's see. Let me see if I get this right. But it basically that's what's gonna be worth when it expires, right? But we're only gonna pay $4.32. Now, if this thing expires and they both in the money, we can sell this at $5 full value, But we paid $4.32 for it. So what do we get? All right, so if we buy it for $4.32, well, let's say we sell it for $5. Let's do it backwards. We sell it for $5. We're gonna get $5. Oh, that's cool. But we gotta buy it for $4.32. So that means the most we can make is 60. God, my math suck, man. $5 minus $4.32. That's right, 68 cents. The most we can make is 68 cents or $68 because these options, they times 100. Okay, one option is 100 shares. So they dollars. I know it's talking cents, but they're dollars. So the most we can make on that spread is $68. All right, so we're going to sell. We plan on selling this thing for $5, but we're going to buy it for $4.32. So the most we can make is $68. Let's analyze this trade and where you can see the graph and you could kind of get an idea of what's going on. So let me see. Let's get the analyze thing here. I got analyze trade. There it is. See right here. So basically, if this thing expires, all right, if it expires anywhere at the price of, let me see where it's trading at. Yeah, it's trading at 297. So it's trading right here. See that line? But if it expires anywhere above 290, we're going to make money. We're going to make all kinds of money, all kinds of $68. Yes, we are. So it's already above that price. That means if it stays here, goes higher, or even goes lower by up to $6, we will still be able to sell this thing for $5, right? So if it doesn't, if it keeps going down, and it goes down to 285 because is that the 285? Yeah. If it keeps going down to the 285 price, that means we lost. We lost the whole thing we paid for it, $432, right? So you're like, hey, man, hey. Why am I risking $432? $432 just for a small chance to make $68. That sounds crazy, right? Here's $432 but think of it like this. If you give a friend $432 and say 30 days, I want you to give me back $500. You'd be like, I'll take that. Let's say the friend is credit worthy, okay? You're going to get it back. You'd be like, deal. Think of it like that. You know what I mean? So let's say, okay, $68 divided by 5. No, yeah, we got 432. $68 divided by 432 equals 15%. Okay, so we have, actually that was 15.7. Let me make sure, because that's 16. Yeah, $68 divided by 432. Okay, 15.7. 15.7%. Basically 16%. We're going to round that off. 16%. There's a 16% chance. No, excuse me. There's a basically you're basically taking that $432 and you're going to make 16% of it in 26 days. You can't be a bank. You have to give them that money for a year just to make 1%. So give them $432 for a year, and they're going to give you $4. You just put this in this trade for 26 days, and you're going to make 16%. You're already in the money. There's a good chance of it expiring, and you can sell. You don't even have to wait for the 26 days. If it gets just close, as it's getting closer to that date, and this thing is still hanging above the strike price of $290, it's gonna start to make money, and you could sell it. You could sell it for more than $432 and still make some money. So you see, it's a higher chance of success, a higher chance of probability that you are going to make money. Give me a minute here. All right. So, are you able to understand that? If anybody's watching, there's some people watching. I see ya. You're gonna have to put your questions below if you have any questions, because this is how you should trade these. You don't want to necessarily come down here. Most people will buy, say, this credit spread, this 297. It's out of the money, and let's say they go 5 strikes out. So that's 302. Right? So that's going to cost them $260 for a chance to make $240. That's great. But you know what? It might not make any money at all. It's already out of the money. So let's analyze this trade. Let's analyze it and check it out and see what we got going on here. Let's go ahead and get rid of this one right here. So you can see if it's anything below, what is this? What do we trade here? Move this out the way. What do we got here? If it's anything below 297, we're going to lose all of that money, that whole 260. Well, at least it's not 432, you might be saying. Yeah, but you didn't have a good chance to get it. You didn't. Well, let me drink some water. Goodness gracious. Yeah, but the chances of success are slim. They're slim. You could start losing money right away if this thing just starts, right, if it starts going down, because it's trading right here at 296. What do we kind of trade here? I'm kind of lost here. The 297 to 302, and the stock is trading at 297 right now. So if it starts to head down, see, it's already down, max loss. If it closes right here in 26 days, you lose all the money. You don't make 1 penny unless this thing starts going up. If it stays here, never goes up, you will lose, because the value of this spread is losing money every single day. And if you look right here, here's the trade. See, it says theta minus 245. So basically, you're losing $2.45 every single day, and it's not linear. So every day it gets closer to 26 days, you're losing even more than $2.45. Tomorrow it could be $3. The next day it could be $3.25. The next day it could be $3.50. The next day is $3.75. The next day you lose $4. The next day, you see what I'm saying? That's what's happening. If it stays here, the only way you make money if this thing starts going up. So that's a lower probability trade, right? But if it does, let's say it goes up and it goes higher than 300. Yeah, man, you did good. You basically took $240 or $260 to make $240. So basically, you took 260. Let's see right here. No, you made 240 divided by 260 equals 92% of your money. That, gosh, man, if you could do that all the time, you'd be rich, boy. You'd be rich. But the more chances, the more risk, the more chance of, how do I put this? The more you risk, right, for a better chance of return, the more risk you take, right? So the more return you try to grab, the more risk you're putting on yourself. And why do that? Let's hit base hits. Let's just keep getting that 16%, that 20%, that 25%, and win more and get more of that money. Because if you go for those home runs all the time, which I do a lot, no, not a lot. I do it from time to time. Gotta have a little fun. Don't go for that. You get most likely eventually the odds will catch up to you, and you won't have that kind of money. You'll lose. You'll be losing money. You know what I mean? So, like this trade, if it starts to hang out here or goes down, you can see that curve, that purple line is today. You're gonna be losing money, and eventually, once the 20 days hits, 26 days away, you're gonna lose the whole thing. You're gonna lose the whole thing. Now let's go ahead and look at my trade again. This is the first trade. See how it's in the money? Now let's look at the theta. The theta right here. Now it's kind of a little, what was that, 3 cents? Yeah. So every day, and it's not linear, that every day, if it just stays right here, we made 3 cents. And then the next day might be 4 cents, and then 50 cents, and then $1, then $2. And, so we have positive data. Basically, this trade is not losing money. That's the important thing. Every day that we hold on to this trade, it is not losing money. It's actually making money. Okay, and as long as it stays up here, it could stay right there, never move. Right? Just stay flat. Just look at the chart. Just kind of do one of these things and hang out right there in that gray area. We're going to win. We're going to get all our money. You can't beat that. So let's go back to the Analyze tab. Let's look at that once again. All right, so we're saying that this is my trade, the 285, 290. Let's draw that on the chart. Let's have some fun. Let's have some fun with this a little bit. Draw it on the chart. Get rid of that. Yeah, get rid of that. Get my so 285 to 290. Here's 290. Okay, this is going to be approximate 290 and the 285, right? Right around there. Right around there is 285. There it is. Let me draw that. Get that close. Let's look at that. So here's the stock price right now. Okay. The high. That's the high. This is weeklies. Let's pull up the daily. Okay. You can see a little better. There we go. The daily. Let's look at that. There it is. High was 301. So basically, this thing could keep coming down. It could keep sinking. It could bounce here. See, you got this level of support right there. So it's even, it could most likely, if this comes down to here, there's a good chance of it popping up because why it happened before in the past. There's buyers right there. And if it does that, or if it just goes higher, or if it just stays the same, or if it comes down and goes up, as long as it don't penetrate that, we're going to get full value of that trade. And that trade was, what was that, 17%? 17% in 26 days. So annualize that. I don't have my tool. I don't know how to really do the annualize. But let's say you could make 17% every 30 days. Oh, my gosh. You know how fast you'll be a millionaire if you can kind of keep doing that? Do you know how fast it would take? Not long at all. You say a long time. It's years, but not a whole bunch. Maybe it's 8 years, 9, 10 years, right? Millionaire. Just keep making that kind of money. Banks, remember, 1% a year, 2% max. Buy a CD, all right, 3%. Hey, how about this? How about give the government your money for 10 years and they only give you 2%? 10 years. You say, hey, man, take my money for the next 10 years. I don't need it. Just take it for 10 years. Here's $1,000. I only want 2% a year. Okay. We're going to make 17% in 26 days. And it's a 72% chance of probability of success that we're going to be right. We don't have to wait the whole 26 days. We could sell it early if we get a little nervous. We can even sell it early, and I suggest that. I don't need, if it just makes half that, you got to get out and then redeploy the profits. Okay. So let's say, what was it? 32 cents. 68 cents we was going to make $68. If it makes $32, sell it, redeploy it. That's a good trade. I'm like, oh man, I only made $35. But imagine you keep doing that. Imagine you make $35 like this week, next week. Let's say, because it'd be less. Let's say you made $35 every 3 days. Can you imagine the money you could make every Just do the math. Let's see. 35. Let's see if this 350. I'm not saying, I got to give some. Let's say 7 days. Okay. It's 52 weeks in a year. Easy math. And times $35. 1,820. You're probably saying, not a lot of money. I mean, that's good money, but it's not a lot of money. Right? Is that what you're saying? But imagine, like that trade. Let's go to the Analyze tab. Where's my trade? Right here. Can I delete this one? Let's delete that one. Let's pull this up. Get rid of my face so you can see what I'm doing here. And let's make it 2. Let's do it 2 times. Okay, so that means it's going to cost us twice as much. That's 432 times 2, say $864. But we're going to make $136 because the more you make, you can, remember your stash is getting ready to grow, and you could do it 2 times. And then next thing you could do it 3 times. And then you could do it 4 times. And then you could do it 5 times. And then 6, and then 7, and 8, 9, 10. Let's do it 10 times. $680. $680. That's what it says right there. Are you looking at? See when the chart, when it's above here, you see I'm gonna make 680, and this is still a high probability trade. Now the most I could lose is $432. $4,032. Excuse me, $4,320. Right? That's the most I could lose. So let's do the math on it. Let's see if it's still the same. Let's see here. Okay, 680 divided by 4,320. I'm still at 15.7%. You see what I'm saying? Imagine multiplying that, okay? Just getting that money, right? Times 10. Can you imagine times 20? See, so as your stash grows, you'll kind of keep putting trades on like that. You got to take your 4,000, wait 30 days, get that 680. Actually get the 340 in half that time, because that's what it'll be if it kind of hangs out. If you're right, and it's a good chance we're right. Well, how do we know? It says it right here, right there. This is the strike we're gonna. Wait a minute. Hold on, 285. Yeah, this is the strike we're gonna sell. Actually, hold on here. I mean, my probabilities is wrong, and I actually feel like an ass right now, because we're gonna buy this vertical. We're buying the 285, and we're buying the. Let's go back to what the hell we buying? 285s, 290. So 285s and 290s. Our probability of success, we're gonna bring it back down to 66, 69, because that's this is the 69. It's the probability, which is the delta, is based off our short strike. Okay, so I actually made a mistake, because I was like all excited. I think I was saying 71. Anyway, we got a 69% chance of being in the money. It's greater than half. That's good odds. So imagine you're successful, you win some, you lose some. Let's go back to the Analyze tab, and I said we had 10. Let's make it 20. Say you could do this 20 times because you're just growing, and this is like the power of compounding, because you're making that money. So now you risk $8,640 to make $1,360. So let's say you just make half that. So say 700. Now you're making 700 every a week and a half, right? See where that's a job. Now you can quit your job. You can quit it. How many of you making over 700 a week? You know what I'm saying? So focus. The lesson of today is focus. Focus on high probability trades. Trades that you have a good chance of being profitable, a good chance of making money. Compound it, right? Just like interest. Keep putting it on. Keep putting it on. And it's slow process, but as over time, your curve, your equity curve is just doing one of these numbers, and it's just gonna go straight up. I need to get a picture of an equity curve and put it in there. Actually, the camera's gotta go this way, right? That's what you're looking at. Straight up, man, straight up, and just keep doing high probability trades. Why trade things that are going, I'm going to go back to here. You can make nice trades buying these out of the money options, but there's a good chance that they could lose right from the get-go, right from the start, right from the very start. I'm going to buy the 300s, 247, because I can't afford this 484. You know why this one is 484 and this one is 287? Because that one has a better chance of being right, of expiring in the money and making money. That's why these ones down here is cheap, because who's going to buy that crap? It's like, all right, you want to give me $20? Go ahead. You're going to lose. You know what I'm saying? It's like betting on a long shot. 60 to 1. That's what it is. That's what it is. Betting on a long shot, right? And when you bet on the good shot, the one that's gonna the good shot, when it's gonna win the race, it's like, what are the odds on it? It'd be like 4 to 5, or 8 to 9. Risk bet $8 to win $9 or something like that. I give you $8 just so I can win $9, $1, and I get $1. And if you lose, you lose the whole 8. You know why it's like that? Because that horse is gonna win the race, and everybody knows it. And all they want to do is give you $1 if it does, because they know it's gonna win. But if it loses, you are out $8, right? So that's basically what these cheap options are down here. They long shots. Don't buy a long shot. Don't do it. But same principle, right? Because if the long shot wins, oh man, you're gonna be rich. Just check this out. Let's buy a long shot. Let's buy this 93 option here. I'm gonna buy 10 of these bad boys. It's only $930. No, let me see. I said $1,300 for that one trade. What was it? 1,300 divided by 93. I need 13, okay, for that similar trade. So let's go ahead and analyze that. Boom. Get rid of this one. And you can see, right, I spent $1,209. That's what it's going to cost me for the 304s. That means anything below 304, I'm going to lose my money. Actually, it's a little bit above that. But let's imagine if it goes to 310. Holy shit, look, it says I'm going to make 8,000. Well, okay, right now, if it did that today, it'll be 8,361. But if it did it at expiration, it's 6,313. Let's say it goes to 320. Oh, man, I want to make 19,848. See, notice the trade that I put on. You can't make anymore. And I'll put it back on, right? There it is. It doesn't matter if this thing goes to 340. Wait, 350. The most you're making is $1,300. That's it. You capped your gains because you sold that out of the money. You bought the in the money, and you kind of sold the further out of the money, the further strike, but they're both in the money. You know what I'm saying? So, yeah. And that's why you capped it, and that's why it makes it a higher probability. And that's why this one pays crazy. They know it's not going to go up to 340, 350. See, it just keeps going up. Imagine it went to 450. How is that going to happen? What could bring the SPY in 30 days up to 450? Nothing. But if it did, you just made $189,000 off of buying these cheap options right here. So that's what cheap options can do. It's a good chance of hitting that home run. Back up. But a better chance of striking out, a real good chance of striking out. A lot of people buy these when it's a sure thing. Man, I know it's going up. And if you know something, you got some inside information, yeah, go ahead and buy that. Now that's against the law. So you didn't hear from me. But if you think it's going to go up, and you just 100% positive, I'm talking 100%, yeah, go ahead and buy it. Just go ahead and buy it. But if you're 99% sure, you might want to buy these purple options. And that's in the money options, okay? These are already profitable. Well, they have a better chance of expiring in the money, okay? Imagine you bought this way up here, right? 93%. These are 93 deltas. So basically a 93%. Basically, it's only a 7% chance of it going down that far. And you bought that, and it cost you $4,560 to buy that option. Why? Because most likely it's you're gonna get all that money back. It's just gonna be still worth 4,500 and whatever, But it's not 100%, it doesn't have a delta of 100. But let's spread that out. Let's say we bought the 250, 255. How much will that be? Almost $500. $494. So we have to spend, this is like buying that long shot. So we have to spend $494 for a chance to make $6. That other $500. That other $6 will be eaten up in fees, so you never really want to do it. It'll be commissions to sell it, or if you just let it expire, and then they both in the money, so you're gonna get exercise. Your broker might charge you an exercise fee, so eventually the $6 is gone. But the reason why you're putting up $494 to make $6, because there's a goddamn good chance you're gonna be right. Real good chance. What is this, the 255? There it is, 92% chance you're gonna be right, and everybody knows it. So for them to say, you know what, man, God damn that trade's gonna be perfect. You know what? You want $6? Give me $400. You want that trade? Give me $494. Go ahead, give it to me. And if you're right, I'll give you the $6. That's basically what it's saying. That's the market maker. They the bookies, right? They the bookies. So that's what it's about. Trade these options. Trade these spreads. Cool off. I just got to buy one. I just got a McDonald's coupon. Just went away. Trade these options. Trade these vertical spreads, but trade in the money. Okay? Trade them in the money and just watch. They're slow moving. There's a good chance of you being profitable. Now, I'll tell you what I like to do. I like to go way down here, way down, and do these leaps, right? What is this? Damn, it's a goddamn 3-year leap. And I like to come here, and I like to buy these verticals. And I might buy it right at the money, because I'm basically saying, you know what? 54 cents for, this is $1, right? Basically, I'm going to put up 54 cents. Let's call it $54. Okay, I'm going to put up $54 for a chance, since it's $1 wide, to make $100. So the profit is $46. I'm basically saying that the SPY is going to be over $297, which says give me a 54. See, it's still profitable even though it's out the money because it's so far away. But I'm basically saying, you know what? I believe that the SPY is going to be basically over today's price, $297. Let's bring up the monthly. In the next 3 years, right? I'm saying this thing is going to be higher in the next 3 years, and that's the only way it loses money if it's not. Now, granted, we could have the big one, man. We got the big crash, and we're going to lose. I'm trying to make it come over here, right? We got the big one, and it just goes down for years like it did in 2000, went down like for 2 years. But the odds are, most of the time, stocks move up 70% of the time. So look, see all these years. Imagine you put that trade on I just did from way back. You've been putting it on since 2009, 10, 11, 12, 13, and a whole bunch. Oh, you're making all kinds of money. It takes 2 years for it to profit, but it's still the better rate than you're putting money in the bank. Still better, right? Because the bank 3 years out, what are they going to give you? 6% you would have made on your money, basically. Give them $1,000 for 3 years. They're going to give you $10, $20, $30 about 3 years. Give $30. Put $1,000 on that. You're going to get way more than $30. Yeah, you're almost going to double your money. Almost a double in 3 years. You can't beat that. Can't beat that. All right, so I'm going to go ahead. I see I got a few people in here. I'll give you a chance to leave a comment. Let me, if you have any questions, right? That's why I do this live. And if I stumbled, if I was flustery, forgive me. This is a live video. A lot of people don't do these live. They don't do them live. I do them live, man. I'm going to do it, record, finish, done. It's done. And that's why I like them live. So I might fluster a little bit. This is my first time actually kind of, teaching about vertical spreads. If you watch my videos, I'm just like doing it. I'm just, got the, damn, I didn't mean that. I wanted you to look at me. There you go. I just kind of like, yeah, I'm trading this and putting that on. Oh, I did this. And I'm talking over everybody's head. If you know nothing about options, I'm talking over your head. This time I want to talk. If you knew nothing about options, I want to talk to you. I want to kind of get you in this and show you how to make a good high probability trades to just make consistent money, consistent income. Now, granted, if you had an 82% probability of success, probability of being right, man, boom, every 10 trades, you're nailing 8 of them. Just keep in mind that this 18% chance you could lose. All right, so we need that 18% will come. It will come to reality. All right, but you got to make sure those losses are small. Okay, so just if you see you kind of it's not feeling right, you're starting to lose, just keep it small. Don't let it go to full value. You lose the whole trade. Nobody wants to lose $450 because they was trying to make $50. So if you see yourself losing maybe 50, get the hell out and redeploy, and then you get the odds back. So that's what you got to do. That's what's gonna make you win. That's what I do, right? I win. Now, trading is fun. It's very boring if you're systematic, but if you want to make money, you gotta be just like that. You gotta be slow, take it easy, systematic. But we all want that little excitement. So that's when So I do trade some closer to the money, some even out of the money. I sometimes I go for that home run. A lot of people say don't do it, but it's just the fun. That's the gamble in me. That's basically me going to the casino instead. But I'm doing it right here. I'm not at the casino. I can do it right here. So those trades is like, you know what? I'm at the craps table. Bow. It's okay to do that. It's okay to just throw the dice. It keeps it fun. It keeps it exciting. And I understand everybody wants to do that. But these trades are slow. You ain't really got to watch them all. You put your little orders in and make that money. Pick up the pennies, man. Pick them up. Because when you add up that stack of pennies, you'd be like, holy shit, you ever go to the coin store and you dump all your money in there and then it gives you a receipt? You'd be like, God damn, I had like $25 in here. That's basically what you're doing. You're like, I got $25. You're collecting them pennies, man. Right? That penny jar is always filling up. It's never losing money. Right? Your little coin jar, it's never losing. It's filling up. It loses money when you cash out. That's what we want to do to make consistent money. We cash it out. We're going to be the money machine. Hope that makes sense. Anyway, I'm going to go ahead and end this video. I hope you all enjoyed it. Let me know if you liked it. Let me know if you want me to talk about something else, okay, or another aspect. I show you, if you watch my channel, how I've traded. We talk about the markets. Hey, is this all right? Let's see what the futures are doing. Can we pull up the futures? All right, give me a minute here. Pull up the futures and see what they're doing. I always like pulling up see what the stock market's doing. Pull it over here. CNBC. Yeah, pre-market. What the hell? Oh, I got the ad block on. Yeah. So far, the Dow's going to be down. Yeah, we're going to open lower. S&P's down 2.25. NASDAQ down 7. Disney bought Marvel for $4 billion in 2009. Okay, yeah. It made $18.2 billion at the box office since. Wow. Talk about. Hey, so Avatar. Now, what's that movie? Gosh. Endgame. Best movie of all time. I think it happened over this weekend. So, Puerto Rico's Richard, so as I said, he won't run for a re-election, but is resigning as governor. Oh, well, so there you have it. Anyway, there you have it with me. So it looks like the stock market's going to open lower today. And that's what I'm on here every day, just about damn near every day. I might miss a day here and there. And I just talk about my trades, my stock. And I got losing trades and I got winning. I'm not perfect, right? I got all of it. I'm just sitting here and I be real. And that's me. I'm like, oh, shit. gosh, man, damn. I got stupid trades. I got all of that right here. But you can learn a lot. We trade together. You have any questions and all that stuff. And that's what I like. So, all right, I'm gonna go ahead and end this. And I don't see any comments. I'm going to try. Oh, there's the how come the comments didn't come up on my? Oh, I'm sorry, you guys. Cashmatic, yeah, I missed you. Yeah, I didn't have the comments on the home screen. I did something. I done messed it up. And she says, hey, babe, I'm going to try vertical spread. Yeah, man, in the money. Remember we talked about that on the phone. In the money. They work. They work, all the time. It's like nobody considers doing that. Yeah, anyway, you're great. Oh, look at that. Gotta love life like I. Anyway, thank you for watching. I'm Dre, and maybe we'll do this next time, right? I'll get over here on a weekend. You can't talk about the markets. We'll just do some kind of instructional kind of thing, right? Just talk about different types of trades, style of trades, things like that. All right, so thanks for watching. I appreciate everyone, and stay tuned, man. Hit the bell, subscribe. You know the routine, because that way you know when I'm live. Because it's usually between 10 and 1, somewhere in that window. I'm gonna come on live and start talking about the markets. All right, I'll talk to y'all later. Peace. I hit the wrong button.